G'day everyone, welcome back to another update for some currencies, looking at the Euro US, US Japanese, US Canadian and British Pound US today. Now there's been some opportunities open up, we'll have a look at those in the charts in a moment. Before we go there, make sure you hit that like and subscribe, support the channel, and also consider subscribing to the Patreon page where we do some regular scans. And so far in July we've done a scan for dividend powerhouses there for these countries. I'll be doing some more in the coming days, so stay tuned for that. So first looking at the Euro US on the daily chart. Now you can see here the price is pulled back below our short-term moving averages down towards this longer-term moving average. Now that has been in a bit of a bearish momentum according to these moving averages, and I'll go through the hourly in a moment and how that relates. But you can see there as well the price below the moving averages, and so is the CCI, so taking short trades only during that little period. And as soon as that starts breaking to the upside on the short-term moving averages, we'll start taking long trades. Now also note we've got here, there's no divergence currently in play. The CCI is broken up through those short-term moving averages, and as soon as that price breaks up there on above those moving averages on the daily, I'd like to see ideally the moving averages to start to curve up like they did here to be more confident, but that would start being the start of long positions. Now in terms of the hourly chart, you'll notice here first of all, before we go to the hourly, around about the 7th or 8th of May, the price fell below those short-term moving averages. And what we do then is we use this long-term moving average on a 1 hour chart. And you can see there that's around about the, okay, let's keep going back there to about the 7th or 8th of May, around that period there, they fell below that long-term moving average. So that's where you start taking short trades on the hourly or the smaller time frames. Now at the moment, you'll see here, fresh breakout to the downside on this short-term moving average charts or indicator. As soon as that starts to, these moving averages start to curve down, the price is already broken to the downside. The CCI likewise is done to the downside, so taking short trades only. So we're below our long-term and our short-term moving averages at the moment, so potentially a fresh breakout and short trades on the Euro US for the 1 hour. So the US Japanese on the daily first off. Now you'll notice here it's pulled back quite strongly a couple of days ago towards that moving average band. We're starting another bounce. It looks like it's going to bounce off that moving average band, so taking long trades only. Now you'll notice here though the CCI has dropped below, so that could be a start of a potential retrace to the downside. So wait for this to break above the moving averages on the daily CCI to be more confident about going long. You want to make sure that both the price and the CCI are above the short-term moving averages. Now on the hourly, you'll notice here it's already broken above the short and on the CCI and the price moving averages, and it's also broken above this long-term moving average as well. And that moving average band is starting to curve up, so theoretically you can start taking long trades there on the hourly. Also note we did have this, giving us a bit more confidence, we did have this lower lows on the price versus higher lows on the CCI. That's where you can start using the divergence as a potential support indicator to go long. So you could have gone long here on that candle there. Once you start seeing the CCI continue to rise and the price break through that moving average band, and you would have taken a long position there, and you'd still be in a trade and getting close to closing out the trade. Once that CCI touches that moving average band, you would close out your position. Looking at the US Canadian dollar. So here we've had a nice strong run up through that long-term moving average, so taking long trades only. Now, if you're trading this on a daily, this is the daily chart. If you're trading this on a daily, you would have taken your first position, closed out on that red candle, and then reopen it the next day once that CCI broke up from that moving average band, and stayed in a trade until you start seeing that CCI touch that moving average band right up near the top there, and you'll be closing out the trade at the moment. And wait for that to break above on the CCI, as long as the price is also above the moving average band. In all likelihood, this may fall right down below the moving average band. It looks like the CCI is dropping off still, so we might see a bit of a retrace in the short term. This is the daily. On the hourly, pretty much going sideways through that most of that period. Again, taking long trades only as long as the price indicators are above the long-term moving average. You could have taken a long trade when it broke above the price there, and also on the CCI broke out above there as well. And you would have closed it out. This would have given you a very minimal return. Hence, you want to make sure the CCI and the price are still moving in the uptrend, but you would have closed it out on that candle with a couple of pips in return so far. Looking at the British pound US, now on the daily, that's a fresh breakout above the moving average band, and so was the CCI. So you would have taken a long position there on that candle a couple of days ago, and you'd still be in the trade. Again, if you're trading on the daily, wait for that CCI to break into that moving average band. On the hourly, you're also above on the long term and the short term, on long-term moving average, but on the short term, you notice here, those moving averages have constricted, and that really is an indication of consolidation, and that's why I use these multiple moving averages, and at the moment it's dropped below that moving average band. The CCI did that earlier on, and we're having a bit of a decline. Now this wasn't, you could probably argue that was a double top there on the price, although it was probably a slight decline, but notice the CCI was a stronger drop off than the price, and that was a bearish divergence. So if you're going long during that period, you would have ideally closed it out the very latest once you start seeing this bearish divergence. So again, make sure you hit that like and subscribe button to support the channel, and also consider subscribing to the Patreon page where we do some regular scans for shares. Thanks for your support, and see you in our next update.